Hi, this is the Business Guy. One of the most difficult type of mortgages to get is for the self-employed person. So what we're going to do is we're going to get straight to the point and tell you exactly what you need to do in order to get a mortgage if you're self-employed. And I know nobody better but Bob Zielinski, who is the Vice President of Premier Mortgage Associates, one of the top mortgage companies in the nation. So I want to tell you exactly what to do. And by the way, if you appreciate this information, please like so YouTube promotes this video. I'd really appreciate it. And if you haven't already, you can click subscribe so that when more videos like this come out, you'll be up to date right away. So let's go ahead and invite Bob to the conversation, and I'll tell you exactly what you need to do in order to get a mortgage if you're self-employed. So what kind of programs are there today, Bob, for the self-employed person to get a mortgage?
Well, it's great to be on the Business Guy podcast, first of all. I'm looking forward to sharing this information with your audience because there's really a lot of good programs out there that a lot of self-employed borrowers are not aware of because they typically go to their traditional bank, or they may go to the bank who has their commercial business checking account. And the first thing out of the mouth of the banker is, we want 2 years tax returns. This is where it gets a little dicey with self-employed borrowers who present their tax returns. Being that a self-employed borrower is eligible for a number of tax opportunities that they're able to take advantage of according to the IRS code. But when it comes down to looking at the actual hard copy tax returns, the numbers that appear on the tax return don't always translate to the actual income that self-employed entity or person actually makes. So with that in mind, we have a number of proprietary loan products that are designed to help self-employed people obtain residential mortgages. And we're going to talk about 5 or 6 of these programs that I think your audience will be very pleased to hear about. Let's first start out with the bank statement program, if we could.
Yeah, and I'll tell you what, I'll bet a lot of viewers can really relate to this. So many self-employed people, they try to get a mortgage, they get turned down, and then pretty soon they just give up. So
exactly.
you have what? How many programs? 5 or 6 programs where self-employed people can get a mortgage as an alternative, and they use alternative methods to get it than the traditional banks.
That is correct.
Yeah. So let us know, what are those ways that self-employed people can get mortgages through your.
So we're gonna talk about. I'm just gonna summarize the 5 or 6 programs, and then we're gonna take a light dive into each one. We're gonna talk about the option or the feature of the bank statement program. We're gonna talk about the asset utilization program. We're gonna talk about providing just 1 year P&L statement program. We're going to talk about the IRS 1099 program, and then the DSCR for investor program. And finally, we're going to close out with the program that is for the self-employed borrower who is not quite in business for 2 years, and yet they've been in the industry that their business is in for many years. So we have a program for that individual or that group of people. So with that in mind.
So it's not just in the little teeny tiny box. You have multiple programs to offer.
Absolutely.
Yeah.
Absolutely. We're going to take a look at now. The first program is called the bank statement program. So what is the bank statement program? This is a program designed for the self-employed person who can provide either 12 months or 24 months of bank statements, either their personal bank statements or their business bank statements. And what we're going to do is we're going to take, say, the 12 months of bank statements that you provided, and we're going to have an underwriter analyst look at the deposits that are going into your business bank statements each month. We're then going to average those deposits, and then depending upon your type of business, because we're going to have you fill out a business narrative profile of what type of business you're in. In most cases, we're going to usually lop off 40% of the averaged monthly deposits. Typically, they do that in underwriter, and that is your income. And in most cases, we find that the income is more actually than the borrower actually is making because of the deposits and the way we underwrite the bank statement deposits.
Yeah, so it's not just a matter of show me your tax returns, how much you make. It's also not just that, but it's show me your deposits. What actual cash flow do you have?
Yes. And in fact, on these 6 programs we're going to talk about, I do not want to see your tax returns at all. Let me repeat that. We will not ask for your tax returns at all.
That's a big deal because that's what so many banks turn down self-employed people for because they're taking the tax deductions. The big thing on, Uncle Sam is to lower your taxes and lower your income and take a bunch of deductions. But that looks like, they're not making enough money to some bean counter at the bank.
Correct. That's why these programs are so exciting for self-employed people because I don't want to see your tax returns. The bank statement program is such an effective program. I just helped Party out that he showed me his tax returns and I usually want to look at them, just underwrite them myself. And I rejected them. I told him it's not going to work. And then I offered to him, get me 12 months of your business bank statements. And sure enough, from a situation that the tax returns would not have justified this borrower qualifying, the bank statement alternative program clearly qualified the borrower for the mortgage. And they were so excited that was in fact the case. So that program is an exciting program. And again, it comes down to providing 12 months of bank statements. We're going to analyze the deposits. We're going to deduct what we call the expense ratio for your business. And then if you don't agree with our expense ratio deduction, for example, we will accept a letter from your CPA or your accounting person, as long as the accounting person, CPA, does state that your business only is maybe 22% expense ratio should be applied. We'll go with that number from your tax professional. So that's the other interesting part to this program. So let's move on to the next program.
Yeah, so let's call that one the bank statement program.
It is, absolutely.
And that's kind of a subcategory of that is the CPA letter.
Yes. In some cases, you don't need a CPA letter. Yeah. It's only if you disagree with the expense ratio that we applied to the deposits. It sounds complicated, but it's a very easy program to get qualified for a mortgage without tax returns.
Oh, by the way, I know a lot of people want to take advantage of your program. How can somebody get a hold of you, Bob? What's your number?
You can call me directly 24/7, 954-415 3045.
3045. So what's program number 2 for self-employed people getting a mortgage?
Yeah, so program number 2 is also a really exciting program. It's called asset utilization. And what that means is a lot of times when we meet with self-employed folks, they typically are people who are very disciplined and people who over the years have acquired and built up a nice nest egg of liquid assets. And that liquid assets could be your savings account, your checking account, your IRA account. It could be your stock and bond brokerage account. Those are all assets that I can take those assets, and let's work with some simple numbers here. Say you had $1 million in liquid assets of any of those types of accounts that I just mentioned to you. We are going to take the $1 million and we are going to divide the $1 million by either 36 months or 60 months. And by doing that, that creates income for you. And when we see the $1 million that you have, say you need hypothetically $200,000 for the transaction that you're involved with, the real estate transaction. So we're going to net out the $200,000 and we're going to take the $800,000 and divide that by either 36 months or 60 months to come up with your monthly income. And it's such a beautiful program that a lot of people can't believe that that's how you arrived at my income.
So we have the bank statement program, and it's labeled here, I see on my screen, the asset utilization program. So those are the two we've discussed so far.
That is correct.
And that's great because, think about it. If somebody buying a $500,000 home, they have $1 million socked away, and that's their primary residence, and they have, the family living there. They're not going to lose that house when they have $1 million socked away.
There you go, Mr. Business Guy. You hit it right on the head. People are not going to walk away from their home with those kind of assets, for sure. And it's been proven over and over again. And you're using, which sometimes we all question when we go see our local community banker, common sense.
Yeah.
It's that easy. Common sense.
We want to reward our small business owners, not kick them in the teeth. I love this program because I'm really pro-business. And I think this is a common sense approach to getting mortgages to self-employed people. So bravo.
Correct.
Yeah.
So the third program we want to talk about is called, very simply, the P&L statement program. And what that program is, again, it's for the self-employed borrower who has had their business for at least, in this particular case, 2 years. And you would need to provide us, it doesn't have to be an audited P&L statement from your accountant, but it would be a P&L statement for the last 12 months of your business or the last 24 months of your business. And you would provide that P&L statement to me. And in addition, we would need 2 months of your recent bank statements. And again, the logic is if you're making $10,000 a month in income, for example, most likely you want to see that kind of deposits going into your business or your checking account statement where you would deposit your monthly income. So that's why we would also ask for the 2 months of bank statements.
And I want to point out to those watching, as you're watching this, instead of just throwing your hands up and saying there's no hope, as you realize now, I'm sure, make sure to, think, okay, what category am I in? And maybe it's more than one of these different programs that Bob's offering, you qualify for, you're in that category. Hey, I got a lot of assets, or I got a good P&L, or I got a good bank statement. So think about which of these type of programs you can use, or, one or more.
Yeah, you're spot on again with the assessment of these different programs. You might be a self-employed person who doesn't have all the assets to qualify for the asset program, but yet you might meet the criteria for the P&L statement program. So let's move on to your self-employed people who get an IRS 1099 form every year. And that could be, independent contractors. If you have folks out there, I'm sure you do, who are realtors, they typically get 1099 forms. There is a program also for 1099 independent contractors. And the program is very simply, if you want to provide me your most recent IRS 1099 form or your last 2 years of IRS 1099 forms to qualify, we will take the gross income of the 1099 and we'll again deduct a small percentage in this case of expense ratio to run your independent contracting business. And very simply, after we do that analysis, we will divide it by 12 months and there is your income. So most likely a 1099 person, when they file their Schedule C on their personal tax returns, if they do, they're going to take advantage of all of the tax expenses or business expenses, I should say, that they incur to run their business. So that $100,000 1099 form is now, after all your business expenses and maybe a few others, might only be $50,000. But actually, as a sole proprietor, you're able to take advantage of depreciation of equipment, business cars, of whatever your equipment is. So a lot of community banks or bankers will not, they just look at the bottom line, whereas this program will just take the gross of your 1099 income and expense out small percentage for your business, operating your business, and divide it by 12 months and there's your income.
Yeah, because they know, again, self-employed people are going to be taking tax deductions. What the 1040 form on somebody's tax return says doesn't necessarily reflect how much money they have access to, to be able to utilize it. Like if somebody goes on vacation to Disneyland, maybe they're also going there for business purposes and they're just going to Disneyland. That's what people do in reality. They go to Disneyland, maybe they attend a business conference and the family goes to Disneyland and maybe the wife's part of the business. She goes there as well.
Correct.
If it's a husband-wife owned business. They go there together and happen to go to Disneyland while they're there and are able to take that trip off.
Yeah, that's right.
Whereas, a bank might not recognize that as a business expense and they just think of it as decreasing the amount of income somebody's making for mortgage qualification purposes.
But again, on the IRS 1099 program, you do not provide any tax returns to me at all. We just want the actual 1099 form. And you need to be, again, in that business for a couple of years, practicing in that business, or you have some background in it. That's what we also like to look for. Mm-hmm. So the next program I like to talk about is for our small business owners or independent contractors who haven't quite been in business for a full 2 years. Again, this 2-year break point that when you go to your local bank, they want 2 years of tax returns, but you don't have 2 years because you haven't been in business for 2 years. Well,
that's a common one you hear. Yeah.
Yes. So we have a program for folks out there who are in business from 1 year to a little less than 2 years. In that particular program, we're going to look for either you being eligible under the bank statement program that we earlier talked about, or under the asset utilization program that we talked about. We also like to see you have at least 2 years experience in that same occupation. And typically we like to have a good credit score of at least 700 for that program if you haven't been quite in business for 2 years. So
yeah, say somebody was managed a plumbing company for 10 years and they decided to launch out on their own. And they've been in business for, 18 months?
Yeah.
They haven't run their own business for 2 years or more, but they've been in that business. They've managed a plumbing company, so they know what they're doing.
That is correct. Typically we will ask for a business narrative about yourself and your background. And again, it's another way of qualifying for a mortgage without giving me any tax returns. So either use the bank statement program or the asset utilization program for that particular type of program.
Once again, could you give us your phone number again, Bob? People can get a hold of you.
It is area code 954-415-3045.
Yeah, so give Bob a call. I think you might be able to take advantage of this, and hope isn't lost.
No, not at all.
Yeah.
Not at all. There's a lot of options out there, but I have to add, I used to be a banker myself. I worked for one of the big brand banks that we all know for 25 years of my career. And I remember turning away a lot of clients who, couldn't produce the 2 years tax returns, or they could produce the 2 years tax returns. And yet at the end of the day, it showed very little income, and they would plead with me and say, hey, that's not possible that I only make that income. Well, I'm the banker, and that's all we're going to give you credit for.
Exactly.
But in reality, if we had these kind of programs for those folks who I rejected many years ago, I would have qualified probably 2/3 of them for our programs, or maybe more. So I want to encourage all of our self-employed folks out there that there are programs that are designed specifically for you and your business. The last program I like to talk to you about is if you are an investor and you like to buy investment property, there is a program where, again, there's no tax returns provided. And that particular program, we would qualify the loan based upon the rent roll, the expected rent roll of the property. And that's how we would qualify. We have a ratio that we look to. So let me give you a very simple example. For every dollar in expense that you're paying for your, as we call PITI, your principal, interest, taxes, and insurance, we like to see at least $1 in return in revenue from the renter. And that's a 1-to-1 ratio. So say you don't meet the 1-to-1 ratio, for example, we also will allow you to go below the 1-to-1 ratio. But you get the sense. We're going to take what the outgoing expenses for PITI is versus the incoming revenue from the tenants that you collect rent from. And that's how we would qualify you for the loan. So that's another very unique program for self-employed people or any individuals out there who would like to start buying investment property, but yet their tax returns don't show enough income for them to qualify for that loan for that investment property.
And that makes sense. If the tenant in the property can pay the mortgage and then some, and there's some cushion in there for vacancies and so on, you have a program where they can qualify. And I think you had mentioned before that they can own the property in an LLC as well.
That's right. And all of these programs I went over with you, if you're buying any of these properties in as an investor, you are eligible to title the property in an LLC, which is a very important aspect from an investor point of view because you want to avoid being caught up in lawsuits and have personal obligation to the lawsuit decision by putting in the LLC title.
Now, one of the things I had covered on the channel before is some people are saying, well, I want to wait until the interest rates come down before I buy. And what I tell them is, hey, if you see a house that you want, buy the house. When the interest rates go down, refinance. But don't not buy a house just because you're waiting for an interest rate to come down, which may not come down anytime soon. So you agree with that sentiment?
Yeah, you're spot on. I believe if you have found a home that fits all your needs, but yet you're not too crazy about the fact that interest rates have gone up compared to a few years ago, I wouldn't let that be a hindrance to your decision. I would move forward because just like corporations, Think of your home as a business, a corporation.
Yeah.
Corporations are constantly restructuring debt to get better. When interest rates drop, they're constantly restructuring that debt to fine-tune their balance sheet and their income statement. So a homeowner is no different. You can restructure your debt on your home when you see interest rates have dropped by a point or more, and it makes sense based upon the closing costs that you would have to put out to refinance. And in most states, refinancing a home mortgage is relatively inexpensive. So you are correct in that analysis. Don't let that prevent you from buying that home.
Yeah, in fact, when my wife and I, we bought our first house, our interest rate was 9.5%. And I would be jumping up and down excited if we could have gotten a 6 or 7% mortgage. But it's just that, we have a backdrop, compare and contrast of recent historically low mortgage rates, and people are thinking it's so high now. But I tell you what, if we would have had as low as it is now, we would have been excited because we were, paying
I agree.
I
guess it just depends upon your point of perspective. I too, owning our home for almost 20 years now, I think I've refinanced and restructured the debt probably 4 or 5 times already. And in fact, I'm looking to restructure it again because things happen in life. Life changes. You might have a whole bunch of, coming off of these last couple of years in the real estate market, most homes across America have appreciated nicely, anywhere from 10 to 25%. And maybe you want to start your own business, but you don't have the capital to do it. So that might bring it down the road to where if you refinance and maybe pull some cash out of your home to fund and capitalize your business, to get started owning a business, that would be an opportunity that, the one other factor with interest rates, I want to remind folks out there that interest expense is one of the last few tax deductions that Uncle Sam allows you to offset your ordinary income against. And it makes a difference. The interest rate that you think you're paying, actually after tax consequences, it's much lower than you actually are paying because Uncle Sam allows you to offset it and use it as an offset against your ordinary income. So that's the other major benefit in using mortgage as a financial tool in acquiring a property.
That's great. So we'll review. We have the bank statement program, the asset utilization program, the P&L statement program, the 1099 form. There's a program for business owners that have been in business for 1 to 2 years, so the less than the 2-year threshold that most banks use. And then there's the investor program. So you have 6 programs that you can use one or more of for self-employed people. So self-employed people, there is hope for a mortgage for you. And nobody I know better that knows this stuff better than Bob, for anybody you know. So it's Bob Zielinski with Premier Mortgage. I really, really highly recommend that you contact him. If you're self-employed, you want to get a mortgage. His programs are just off the charts. They're not offered by these banks. So now you have hope.
Well, thank you, Mr. Business Guy. And it was a pleasure sharing this information with the audience. And like you just mentioned, I'm here. Use me as a resource if you need help. And if you need for me to actually help you out on your transaction, I'll be more than happy to work with you. Thank you, Mr. Business Guy.
Okay, thanks so much.
You're welcome. Have a good afternoon.
My good friend, Bob Zielinski. Thanks, Bob.
Thank you.